What's going on, everybody? This is Phil from Millennial Money Gainz, and welcome back to a brand new video. In today's video, we are going to go over my total dividend stock portfolio. Now sit back. We're going to be doing these videos at least once per week. This can get a little long, so grab a drink, grab some food, sit back, and enjoy this dividend portfolio update. Now listen, I understand you may be like, where have you been? You've been MIA. I know I've really just been very busy with work, but I'm going to keep putting these videos out at least once per week for you guys, just to keep track of my dividend portfolio. So if you guys are ready for this, make sure you like, make sure you subscribe, and let's get into the dividends. So first up, I'm going to be talking about what stocks I'm holding, how many shares I'm holding, and whatnot in terms of just different what the direction I am going in with this portfolio. So first, as you can see here, right now I do have a QYLD. This is a covered call. I have been selling covered calls on the positions that I do own 100 shares in, just for a little bit of extra income. So right now I'm making about $20 a week or so in extra income just by selling these covered calls. But let's get into the first stock. The first stock up is AT&T. Now, I do admit I went a little heavy on AT&T. I do think I am going to shed this position a little bit. I want to keep it above that 100 shares, just so I can have the 100 shares and sell the covered call on it. But I think I'm going to trim it down by about 25 shares or so. Right now, I do own about 125 shares of AT&T. My average cost is very high at $27.24. I'm down about 37.5% on this position, which is just about $1,300. So I am down a lot. They do offer me a pretty decent dividend yield at 9.37%. But like I said, I went too heavy in the beginning, and I am going to shed this position a little bit. It is about 8% of my portfolio. We're going to try to get it down to about 5% of the portfolio. But let's move on to the next position. Next, we have Realty Income. I own 55.24 shares of Realty Income. My average cost is $67.24, so I am slightly down on this position. It is almost 14% of my portfolio, and I'm down about 0.5% or so. So I do get these monthly dividends. I will be receiving them, this one for $13.67 in the month of September coming up here. So these dividends, they do get reinvested back in. I am holding off on this position right now. If it drops a little bit lower, maybe I will buy some more. If it gets into the $60 range or so, I will probably buy some more. But for now, I am happy with the size of my position. It is a big chunk of the portfolio. Next up, we have Intel, another stock I am getting beaten up on, ticker symbol INTC. I own right now 101 shares of Intel. It's about 12% of my portfolio. I am down about 35.5%, which is like $1,700. My average cost is $48.74 per share, and Intel has just been taking a beating, down almost 42% in the past year. I thought I was buying in at a good price, but apparently not. If we take a look at the last 3 months, it's down 21%. So maybe we found the bottom here with Intel. They do offer a pretty decent dividend of almost 4.6%. And their PE ratio is sitting at about 6.75 right now, which is lower, a lot lower than its 5-year average. I believe its 5-year average is around 13 or 14. So it's sitting a lot lower than that. I'm happy with this position size right now. I will just be reinvesting the dividends, but I will not be adding more into this position. I am selling my covered calls, and I make about $10 or so on these positions every single week, just selling the covered call. So let's move on to the next stock here. We have ABBV. ABBV I've been doing very well in. So my average cost for ABBV is $111.85. I own about 12.6 shares. I am up about 26% on ABBV. In the past 1 month or so, ABBV is up just about a percentage. In the past 3 months, it is down about 2%. So I am reinvesting my dividends into ABBV. I would like to see the price come down a little bit. This one has just really risen over the last few months, so I'm really looking for this price to come down a little bit before adding more to this position. But ABBV, they offer a very nice dividend of almost 4%. So we're looking for this price to come down slightly in order to add more, but ABBV is a great dividend payer. Next up, we have EPD. Now, I stopped adding shares to EPD. This is Enterprise Products. So, my average cost is $22.17. I do own 45.86 shares, and I am up about almost 21%, which is $211. It is under 5% of my portfolio, and that is where I am comfortable with it being. I am not even reinvesting my dividends into this one. I'm just going to hold these shares where they are at and just take these dividends and reinvest it into something else. So they do pay a pretty good dividend yield of almost 7%. Next up, we have QYLD. So, I own 101 shares of QYLD. I'm down significantly in this position, almost 19%. It is almost 7% of my portfolio. My average cost is $21.56. I am reinvesting these dividends into QYLD just to try to create more of a dividend snowball effect. Since I am not selling this position anytime soon, the average cost doesn't really bother me, and I will just keep collecting those dividends on a monthly basis. They do pay a very significant dividend since they are a covered call ETF. So their dividend is pretty significant, around 10 to 12% or so. So I'm just going to keep taking these dividends on a monthly basis and buying more QYLD. If I could get 1 share per month in QYLD just from the dividends, then the snowball will keep building rapidly. Next up, we have my favorite position, and that is everyone's favorite position, Apple, ticker symbol AAPL. I own 21.06 shares of Apple. It's about 12.5% of my portfolio. I'm up about 2.3% on it, which is almost $75. My average cost is $153.96. I am happy with that average cost. I would like to buy more. I should have bought more when it was lower here. But right now I am adding about 1 share per month into Apple, just because this is such a great growth stock, and it will be a huge dividend payer in my opinion over the next few years. Right now it does only pay about a 0.5% yield or so, but this one will be a huge dividend powerhouse in over the next 10, 15, 20 years. They are growing their dividend by about 9% per year. So I will keep taking those raises, and with the growth on the side, you really can't beat it. Next up, we have Ford. So I have 102.56 shares of Ford. Let's get into there. So this is another position that I sell covered calls on. My average cost is $16.15. I'm down about $75 or 4.5% or so. It's almost 6% of my portfolio. I'm looking to keep this around 7.5% of my portfolio. So I would like to get a few more shares of Ford. They do offer a small dividend yield of about almost 3%. So not too bad. And I'm looking to really build out a solid position in Ford. I believe in their EV goals, and I really think that they will be a powerhouse in the EV sector over the next coming years or so. And after Ford, we have Starbucks. Ticker symbol SBUX. My average cost in Starbucks is $88.09. I own about 30.4 shares, which is about 10% of my portfolio. I'm really enjoying it being at 10%. I like that allocation of Starbucks to my portfolio. So I am up about 0.7% or so on the position. And I will be looking to add more to Starbucks eventually, but like I said, right now I am really happy with that 10% of my portfolio at these current prices. The dividend yield is 2.21%. And past Starbucks, we have JP Morgan. We own 11.5 shares of JP Morgan. The portfolio diversity is it's about 5% of my portfolio. I definitely want to get this up to about the 10% range or so. I am down about 5.55% in this position. My average cost is $126.12. It's currently sitting at $119.13. But it has come down from its high of $167 or so, $68. So I do think that this one definitely has some decent growth behind it, especially with the rates going up, and JP Morgan is just a powerhouse. It does pay a dividend yield of 3.36% at these current prices, and the price earnings ratio is about 9.56. Remember, we look for anything under 25. 20 under 20 is really the sweet spot, but about 25. So I will be looking to add more into JP Morgan. Next up, we have 3M, ticker symbol MMM. So 3M has been seeing a lot of scrutiny lately. I am still... It's tough to say because there is a lot of risk with this one, with the lawsuits and everything. But we own 26.3 shares. My average cost is pretty high at $151.97. I'm down about 19% on the position. They do pay a very nice dividend yield of almost 5%, and they are a dividend king. There is a lot of risk with this play, but I think the reward will really outpace the risk. If we look at highs back in 2018, we haven't really seen those highs since, but I really do think that this position will pay off well. Right now, it's sitting at about 12% of my portfolio, which is pretty good. I'm happy where it's at. I would love to get this average cost down a little bit, but in the past year or so, it is down about 34%, which is pretty crazy for a dividend king to be down that much. But we'll see how this all plays out. I have a decent sized position, but not overly compensated in that position. And after that, we have Zim. So this is a new position that I started. It's not even 1.5% of my portfolio. I am down almost 50% on it. My average cost is $60.56. They pay a really nice dividend. I only have 11.5 shares, but they do pay a really nice dividend, which we did just get. I think it was like $37, almost $37 for owning 11 shares or so, 10 shares. So their dividend yield on Robinhood says it's at 84.5%, which obviously they're paying like special dividends right now. I am not adding any more to this position. Maybe I'll keep reinvesting the dividends. We'll see where it goes. But right now I'm not adding anything more. I'm keeping this position at less than 1.5% of my portfolio. And last but not least is a new stock that I just added, an ETF actually, and that is SCHD. So right now I only have 2.07 shares of SCHD. I'm up about almost 3% on the position. It's only about 0.5% of my portfolio right now, but I have this thing where I'm going to have a reoccurring investment and invest at least by 1 share per week of SCHD. So right now I have it at $75 every single week, which I am buying. And since the cost is below $75, I am getting a little bit more than a share. If the cost does go above $75, I will increase that amount, so that way I can get at least 1 share per month. But, sorry, 1 share per week, not per month. I am trying to build this position up. I'm hoping to get it to around 20% of my portfolio or so. That would really be ideal for me, and we're going to see where we can get there. So we're going to hop right into my dividend spreadsheet right now, which I got from Ryan Williams. If you guys don't know who he is, go follow him. He is fantastic. But we're looking here. My cost basis right now is about $30,518. My market value is $26,487, so I am down about 13% on this position. Now remember, I did start this portfolio not at the best time, so the S&P 500 has been going down a lot recently, so we are still outpacing the S&P 500. My 1 year dividend goal of December 2022 would be $1,500. I am very close. I'm at 99% of it at $1,486. But I expect this number to go down when I do shed some of my position in AT&T. My 5-year dividend goal of December 2026 is $5,000. I'm almost at 30% of this goal. So I'm hoping I can get there earlier than 2026, but $5,000 every year in dividend income seems pretty cool at this moment. And that would be about $400 and almost $420 every single month that I am receiving in dividends. So let's take a look at my monthly dividend income here. So as you can see, we're being pretty steady. There are a few outliers here. Like in July, we got less than $50 in dividends. But right now, our highest monthly dividend payment has been in the month of, I want to say, it was February. So February, which was the shortest month, has been my highest month of dividends. So we're going to be trying to break that. We did reach $133. We're going to reach about $133 in September. I think that may be a little bit more. This one may come out to be my highest dividend paying month, but we will just see. I'll have to keep you guys updated on that one. So going back to the portfolio summary, the dashboard here, we are going to take a look at this little thing that I have added here in 1 second. So far we've made $957.27 in annual dividend income this year, which is really phenomenal. More than double last year and almost 10 times the amount than in 2020. We have really focused more on it this year than we have in the past, but I am really focusing on building this into a huge income stream. Right now, my dividend yield is pretty high. I'm going to try to lower that a bit, just because I don't know if it's really sustainable right now. So definitely shedding some position in AT&T will help with lowering that dividend yield. And now let's go to my covered call income. So this is just something I built quickly. Every single week I am getting more and more covered call income. So far in 2022, I've added $237 in covered call income, and I just started this in June. So it's been about 3 months of consistency of doing it. So not too shabby there, and this income is just going to be reinvested into different stocks. That way I can purchase more and more shares, and it will lead to more and more income. Hopefully, I will get every single position that I have right now up to 100 shares. That way I could sell covered calls on every single position and really rake in this passive income. If I could get 100 shares in every position, which will definitely take some time, but I think I will be able to rake in probably about an extra $2,500 a year in income total. So that is really my main goal. I'm trying to up these shares. That way I get more covered call passive income. But guys, that is going to wrap up the portfolio update. I really hope you guys did enjoy it. I will be posting these videos once a week just to show what's going on in the portfolio, how the income is being increased or decreased depending on how I am allocating my positions, but we are really trying to grow this portfolio. I'm really hoping to get this portfolio to about, I want to hit $40,000 at least in my cost basis or market value, depending on which way the market goes. $40,000 by the end of the year. That is a lofty goal, but I think we can make it happen. So if you guys did enjoy this video, please make sure you smash that like button for me. I really do appreciate that. Also, make sure you subscribe to the channel. We will be posting these videos on a weekly basis, so make sure you stay tuned to follow the portfolio. We are en route to a $100,000 dividend portfolio, so make sure you guys are following the journey and creating your own journey while you're watching ours. Thank you, and have a good one. Peace.